Hello, welcome everyone. If you're in the house, let me know, chime in, comment below. Let me know you're here. It has been quite a while since my last live stream, right? Let me look real quick. So I'm a little rusty for sure, because it's been like at least a month or two. Nope, it's been 3 months since my last live stream. We did velocity banking and infinite banking case study for 2024. That's where we left off. So today's going to be really interesting, just kind of catching up with you all. I want to see how you're doing, what you're working on, your progress. So comment below your progress, your results with velocity banking, infinite banking. What's your next step? What have you been working on this year? Any setbacks? Any cash windfalls? Any wins? Comment below. Let me know. Okay. And today, I'm just going to dive right into it. So I'll acknowledge you along the way, but I'm going to dive right into today's session, which is really just talking about how I'm going to be using the velocity banking concept to invest in real estate. So for the last 6 years, I have been practicing velocity banking in my own finances, infinite banking in my own finances, and building a business. Right? I've been building this YouTube channel. I've been coaching people on their personal finances through the form of stewarding, right? Counselship, coaching, consulting, strategizing as an insurance agent, right? All these different routes that I've been taking to serve you all. I've also been doing it completely for free if you haven't noticed, okay? If you didn't know, I have a whole ministry dedicated to helping people on their personal finances, right? My passion is helping moms, single moms, divorced moms, widows, just moms in general that are struggling with their personal finances and they're looking to make improvements, do better, be a better steward, make better investments, etc., etc. And that has been going really well. I've got clients that I've met. At one point, they were negative thousands of dollars in cash flow. Today, they're positive thousands of dollars in cash flow. I've got people that when I first met them, no job, not working, just got divorced, lost a spouse. So a lot of really hard financial situations. That's really built me up in such a way to be able to speak on a lot of different things, be able to relate to a lot of different people's situations. And I've been able to put some really cool templates together. We now have over 1,000 videos on this channel that I believe are very helpful. A lot of case studies that you can say, all right, here's where this person's at. Here's how old this person is, spouse, no spouse, kids, no kids. I give you all the details, run the numbers, and it's like plug and play, right? And that's great for people who don't have a whole lot of money to hire someone like myself or anyone for that matter on the internet. And you're looking to kind of jumpstart. Okay, that's what the ministry is for. Then, you go through that and okay, all of a sudden you got velocity banking going, you're getting results, you got your HELOC, you got your debt tool. And then somewhere along the way, you start making more money, get promotions. Then you either start a business, then eventually you decide to start a policy or two. Okay. So for a nice percentage of you, you're now at a place where somewhere in your financial freedom plans or goals is to invest in real estate, right? So I'm now approaching that particular stage. For most people I work with, it's let's eliminate debt. Let's get a hold on your personal finances. Let's become a better steward, a better giver. Let's think abundant. Let's change our mindset about money. Let's change our relationship with money, right? So a lot of mindset stuff, a lot of logical, simple, practical strategies to get started. Then it's debt elimination, velocity banking, debt snowball, debt avalanche, cash flow index, combining those. Then it's, graduating to getting insurance, getting protection, building an estate plan, legacy, thinking big, okay, 10x. How do I start a business? How do I grow my income? Okay, cool. Then it's like, okay, maybe I invest in this, invest in that, a little here, a little there. And then usually it's real estate investing. For most of the people I work with, there's a desire to get some multifamily property, single family, some commercial business, whatever it is, it's in the world of real estate. Okay, so for the last 6 years, I haven't been doing any real estate. Part of my financial freedom goal is to implement that. December 21st, 2023, I became a homeowner. So I bought my first property using a first position home equity line of credit with a bank called University Bank, right? And so now I have that in play. It's been 3 months, been doing velocity banking and infinite banking combined to rapidly pay down the balance on my home to create a lot of equity very quickly so that I can then use that equity and maybe even more debt to invest in real estate. Now, another big goal of mine personally, and those of you who are watching or catching the replay that are clients, right? I've always told you guys that I want to be able to make money with my clients in business and in real estate. Okay, it's always been a goal of mine. I wanted to create a platform, a community where I can connect the investor to the client, the person that is providing the capital so that the investor can go out, get the deal, right? Analyze the deal, negotiate the deal, create cash flow from the deal for themselves and the client, the person that's investing the money, which is going to be you guys, myself, right? Or we can play both sides. Maybe you're the investor and the client. So you're the one putting up the capital and you are also searching for the deal, analyzing the deal, negotiating the deal, and creating cash flow for yourself, right? So whichever position you would like to play or like to be in, I want to create a place, a community, an environment where everyone is vetted, pre-qualified, where there's relationships that get built, and I can really moderate that environment and be a part of these different transactions, even shadow certain deals that get done within the community, and then document it. So it's like we have proof, we have trust, we have credibility, we have reputation, all those things. So I'm going to share with you my thoughts, what I'm thinking about, right? What I'd like to do, and I want your feedback on that as well, okay? So we always start with the 4 major numbers. Got to know where you're currently at, what you're currently working with, right? So I'll just kind of share my numbers on average, doing about 30K a month, sometimes more, sometimes a little less in my business. I've got about anywhere from as low as 15 to as high as 19K a month in expenses. I'd say no more than 20 would be the max. And that's business and personal all combined. And this is all business revenue and income. Total debt, okay, I have on the first position HELOC, I'm at 421K owed. That's how much debt I have on my primary home. And when it comes to cash flow per month, super conservative, 10,000. Could be more. It's usually no less than that, right? 10,000 a month would be the lowest number. It could be as high as like 20 sometimes, right? So it really, really varies. So these are my 4 major numbers. Here are my tools. First position HELOC, credit limit 566,000. Interest rate right now is 4.99%, but that will expire soon. Okay, so that'll probably jump to like 9.5 or something. Got some whole life policies, 4 total in my household. Right, so in my household, 4 policies total. And here are my goals as it relates to real estate investing. I want to create 10,000 or more passive which would cover a majority of all my expenses, and it would also replace my fiance's income. So we had to really think this through. We just spent 4 days with each other in a real estate mastermind, and we're getting clear on our goals, what we want to do with real estate. My biggest delay or biggest block, I should say, or challenge is, for me personally, being a content creator, being a coach, having this business. If I try to dedicate any kind of time toward real estate investing, the issue I'm going to have is, well, now I have less time to spend with you guys, doing live streams, creating videos, doing my private workshops, doing my one-to-one coaching calls. So I have to somehow reduce that in order to spend time in real estate to create income, right? And it's kind of like a battle for me, because any kind of money I throw in that direction, I know that if I just kept putting more money, time, and effort in my own business, that will generate more today, right now. That will generate more today. So I have to really think long term with real estate investing, but also have some initial wins, right? For me to get like excited about it, because that's really my biggest block. So that's been one of the reasons why I haven't even really touched it over the last 6 years. I've just been, all in on my business, all in on what God's telling me to do, what's telling me to focus on. And now I feel like I've come up with a strategy that makes sense for me, for my clients, and new partnerships that I'm going to be making with other content creators, right? So just kind of bring this all together. So real estate investing goal, right? Create 10K or more passive. And the other cool part is I'm going to be leveraging my fiance's time and my mom's time. My mom is a real estate agent. My fiance is a lawyer. In the next couple of years, she's willing to essentially not fully walk away from that career, but pivot into real estate and maybe leverage her skills being a lawyer in the space of real estate. She actually is genuinely interested in that. So I'm like, okay, great. So then I can leverage her time, and then I can keep doing what I do best. 4 major numbers, running the numbers, doing the videos, creating the content. This is what I do best, okay? And I don't want to just invest in real estate just to invest in real estate. For me, I need to attach value to it for me to really get excited. So what gets me excited is being able to document the process and make money with clients that also serves people. So there's a mission attached to what we're investing in, and I'm going to get into that a little bit later. So there's a purpose behind it. It's not just for the sake of let's make money. There's actual value attached to it, and there's a mission, and it serves people. That's what's really going to get me excited personally. Okay, so let me break down. Phase 1 is where I'm currently in, and for myself personally. So phase 1, this is how I think everyone should definitely look at real estate, where it's like, educate yourself first, find a community. In the community is where you'll likely find a mentor, someone who is already successful in real estate, not some guru like me talking about real estate that's never done a deal in their life, then getting you to join some course program where you're going to learn how to do real estate. Okay? Just because the guru has a whole lot of followers and makes a lot of money and has a lot of influence does not mean you will experience all of that success that quickly. Okay? So I'm recognizing that I'm in a unique position where when I get into real estate, I'm going to have some advantages. Because why? Well, I've put in the work. Unlike 90+% of people that aren't willing to put in the work, they're just thinking or hoping that they buy some magic course on the internet for $20, $30, $50,000, and then it's somehow someday going to make them a real estate multimillionaire. It just doesn't work like that. Okay. Still, nonetheless, those programs are very sexy, very attractive, and it sells people into this, dream. Can it be real? Absolutely. It surely can happen. Okay. Does it happen all the time? No. Why? You're not willing to put in the work. There's a level of work that is required when you attach yourself to some kind of course program community, right? Not to say that this is the bad thing. We really have to look at ourselves. Say, am I actually even ready for that? Is this actually even for me? Okay, so really analyzing from where you are right now, which is why it's so important to run your numbers first. So let me be the first to say that I'm going to be talking about some things on this live stream and other videos that I'll put out. Please do not get sold by me and just assume that because Denzel's a part of this and because Denzel's doing this and having success, that you'll have success. Okay? One thing I care about a lot is my reputation and credibility as it relates to the work that I do. I only want to put out good work. I only want to put out successful track record, but I understand that there's failure that's going to happen in the process. Not everyone's going to win. That's why I show you case studies where I'm working with someone and we just wasn't a right fit for each other, or they weren't listening to some of the things that I told them to do. Then they don't have success, and then the relationship dies, right? Or they don't have success, the relationship doesn't necessarily die, but it takes them a year before they revisit, have a conversation with me again. Or maybe they heard me talk about, say, Alex, my good business partner and friend, long term for 6 years now. I talk about all the success I've had with Alex, but yet there's clients that don't have success with Alex. Why is that? Don't know. Okay? But I'm not going to take away from what Alex did for me in my business. I will never take that away. I always give him credibility. I always give him credit for all the amazing things he taught me in my own business that got me to this place. Sometimes that just doesn't translate to every single one. So we're stepping into a space, real estate investing, where a lot of people fail. So I am taking extra measure, extra caution to let you know do not want you to get sold just because of my influence or reputation or whoever I bring to talk on this subject. And without you doing the same amount of due diligence that I have to ensure that's a good deal. Okay? Just want to make that clear. Now, there's no confusion here. So now let's take it to the whiteboard. Let me show you what I'm working on. Here's my phase 1. I'm educating myself. I'm learning about real estate. I found a community. That community is ran by the Kwok brothers. The Kwok brothers, Sam and Daniel Kwok, they have a YouTube channel. They talk about velocity banking. They touch on infinite banking. We have similar characteristics, qualities. We are in alignment on a lot of different things when it comes to business. I consider them mentors, coaches, as it relates to real estate and scaling a business. I admire the work that they've been able to do over the years. Kwok Brothers is a YouTube channel that I watched prior to me starting my YouTube channel, which gave me ideas and topics to talk about. Okay? I invested time, money, effort, energy in forming a phenomenal relationship with Sam and Daniel Kwok. Okay? And that has led to a partnership. So I'm now in partnership with the Kwok brothers, and they have two things. Okay? They have what's called the ABC, stands for Accelerated Banking Concept, otherwise known as Velocity Banking, what I teach as well. Okay, so that's their trademarked term, Accelerated Banking Concept. And it's a program that helps people get out of debt, increase cash flow, reduce expenses, become a better steward, get access to capital, understand how debt tools work. Phenomenal community. They do the same thing that I do. They're doing it at scale. They're helping thousands where I can only serve, say, a couple hundred a year, right? On a one-to-one basis. They're able to serve thousands. I serve hundreds, right? I've accumulated over 1,300 clients in the last 6 years, but they probably do that, I want to say, annually. Could be wrong. But I know they've helped thousands of people. And they have a really large YouTube channel as well that does very, very, very well. So that's their first program, ABC. Then they have a second program called the PIM, stands for Passive Income Mastery. And it's a real estate investing program, course, community, mentorship, coaching, live masterminds, Zoom meetings, right? Materials, templates, the whole nine. I am in that community. I just spent 4 days in Chicago with the Kwok brothers and about 30, 40 plus other folks talking about real estate. I've been building relationships with people, clients of the Kwok brothers, their clients. Funny thing is, some of their clients are my clients, right? So there was like 2 or 3 people that knew me that also are in that community. So that was another kind of thing that I really felt good about advancing this relationship specifically is I have clients that I work with on velocity banking and life insurance. And then they found the Kwok brothers, signed up for their real estate program, and then boom, we're now have the potential to actually meet in person, spend some time together, hang out, break bread, and pray and talk real estate, which is really cool. So that is all phase 1 right now. That's what's been going on for me personally. Okay. Now, phase 2 is establishing client and investor partnerships, building a team. This is also something I've been doing personally for myself, where I've been building a team around me to deploy in real estate when the time comes to do a deal. So far, I have 2 investor partnerships. Okay, I'm just going to lay this out. Or I should say 2 potential partnerships, because no money or contracts or anything like that have been signed, right? But I have 1 investor that covers the Latin community. So there's a mission here. The mission is to help Latin families acquire homes at affordable interest rates and prices through seller financing. So the investor that I have here on this side is a client. I'm helping him personally with velocity banking, with infinite banking, putting policies in place, being a better steward with his money, cash flowing more. We run numbers together. So that's how I serve this particular person. And then over time, he's like, hey, this is my passion, serving the Latin community, helping them buy homes and they don't have to go through the banks to qualify and then get stuck into these high interest rates. So he gave me like an example of a family he helped where they bought a house for I think $50,000 at an interest rate of 3.45%, and that was this year, where you can't get a mortgage rate for 3.45% right now. So what does that do? That helps that particular family on the price and the interest rate. They're able to afford that, not get beat up by the banks, and it helps the investor because he was able to sell or finance this property outside of the banks, so he wins. And then the client, let's say it was one of my clients that invested with him, they win because they get a rate of return. They get passive income that they get to create. So I said, okay, that's cool. That's pretty awesome. So I'm like, hey, I want to work with you. I want to connect you to my clients, my audience, and I'm going to bring only qualified clients and audience members to you, and you will present the numbers, the deals that you're working on. So in this particular opportunity, the Latino community, he is covering North Carolina, South Carolina, and Georgia. I think those are the top areas that he's working on, right? Then I got another potential partnership here that is growing that I just made from the Kwok Brothers community, the Passive Income Mastery, when I was in Chicago for 4 days. And we're looking at Pennsylvania, right? And Georgia, right? Now, this investor is someone that already does deals. So is this person. They're already doing deals, and predominantly in seller financing, long-term rentals, single family. This investor right here, this person, has a desire to help veterans acquire affordable housing. So mission, help veterans acquire affordable housing. This investor has a mission. This investor has a mission. The customer, the person that buys the property, wins. Better pricing, better rates. The investor wins. They do a deal. They make cash flow from the deal. And then the client wins. Person that gave the money to invest in that. Right? So in Pennsylvania, they're looking at very inexpensive properties, like under $50,000 from some of the deals they've done, and doing long-term rentals with people who are coming out of jail or prison, and they're able to create like multiple income streams from one property because it's by the bedrooms, right? It's another word for halfway house. It's like a 2/3 or something. I forgot the term, but it's a very unique strategy that they're practicing in Pennsylvania. In Georgia, there's a term called pad splits, and that's another version of affordable housing where you can have 3 different families under one roof, I believe. And it's a way of creating more income for that one particular property, which creates more cash flow, more ROI for the client, person that's putting up the capital, right? So these are the 2 partnerships that I've established with the real estate investor, the person that's doing the deal, negotiating the deal, finding the deal, all those steps, right? Those are the 2 primary focus right now that I'll be able to present to my clients, you guys, and audience. We get on a Zoom call together, right? There'll be people with money. There'll be people with deals. Connecting the money to the deal creates cash flow for both parties, right? I win by creating this environment and participating in those same deals, documenting the process, right? And that's building my credibility, reputation, and trust with those same clients so that they, not only am I serving them in the area of helping them eliminate debt, create more cash flow, reduce expenses, but now I'm able to help them on the top line number, money coming in. This is how we increase more income. Building higher rate of return, also getting into a space that they desired. So maybe at first it's just here's capital, here's money, create ROI, and then maybe they want to shadow that investor. Maybe they want to learn so that they can do it for themselves at some point in time. Maybe this is their strategy to walk away from their 40, 50-year career and then transition into part-time real estate investor through their 60s, 70s, and 80s. Why not? I have many clients that want to do that. So I want to be able to build that bridge to make that happen. Let me know what you think so far in the comments. Do you like that? That sound good so far, right? So that's phase 2. And then phase 3, I'm not at that point yet, but phase 3 is actually doing deals with clients and documenting the process. All right, so my action steps with you is I'm going to establish recurring Zoom meetings. I'm thinking on a weekly to monthly basis, something in the neighborhood of maybe every other Monday, every other Friday, something like that. And the goal is just connecting qualified clients to qualified investors, and I can run the numbers. That gives me content to produce, to put on the channel. That's a win for me because I can acquire more clients that way to work with and serve. And it's a win for both parties because the investor can leverage me to go raise capital for them, right? So that saves them time, the real estate investor. They can just focus on finding the deal, negotiating the deal, analyzing the deal, closing the deal. The client fast tracks to the deal. They didn't have to do all that work. Maybe they don't have the time like me to do that, but they have capital. And then I win in the process just being able to witness and document, track that content, present it, right? So the pre-qualification process will occur on both sides. I'm only going to work with real estate investors that have actually done deals, that have actually gone through phase 1, phase 2, and phase 3. And I'm only going to work with people that are in this community, in the Kwok Brothers community, because that's how I focus and create success faster. Instead of joining 20 communities like most of us do and join 15 different courses and programs and then they're just like information overload, I like to just narrow things down, pick one thing. This is the hardest thing many of my clients have when they're looking at what to invest in and how to make money. They're looking at 15 things. Denzel, I got something going on with crypto. It's going to explode on this Dogecoin thing. And, I've got like 50,000, coins in that. And then the XRP thing, right? So I got that there. Then I got this little real estate deal I'm working on right here with, mobile homes, right? And I got some open land and I'm just waiting on the zoning and da-da-da. Then I, invested $15,000 with Alex for the e-commerce stores. I got that brewing up, boom, boom, boom. Then I'm going to start my own YouTube channel. And I got some things going with AMC stock because that's about to blow. And this is how a lot of my clients look. They're just chasing money. Don't even realize it. Many of them are Christians too. Just chasing money. And I'm like, what are you doing? What are you doing? Like, what happens when none of those win? What happens if God didn't call you to any of those things? Specifically talking to my clients who are of faith. Those are there that are not of faith. Hey, logically, does it make sense to have your hands in 15 different pots? Or does it make more logical sense to become an expert in one area that you can master really, 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 really well, and then fill that pot with gold and then start pouring it into other pots and have an endless stream of cash flow from one thing, and then you pour it into the next thing, the next thing, the next thing. So you go 10 levels deep on one thing. After you've gone 10 levels deep on one thing, then you start going wide. Okay? That's just me. That's how I've witnessed so many people create success. That's how I've had success. I've seen so many people fail doing the, what is it called? They call themselves the serial entrepreneur. That's the funniest title I've ever seen when it comes to people. Oh, I'm a serial entrepreneur. Are you? How much money you make doing that? And it's like you're making 100 grand, 200 grand. I'm like, you're basically making what a doctor or a lawyer makes doing one thing. And you're over here losing your marbles with 15 different ideas. Now, for the serial entrepreneur, the one that's actually successful is the one that started with one thing. And now they got 25 things going on. Well, that makes sense that they have 25 things going on, but they don't even look a day stressed. They've got teams on each and every one of those different ventures. Whereas many of the clients I work with, it's just them. They're trying to be the crypto genius, the stock genius, the real estate expert, the YouTube expert, and a network marketer expert, and the list goes on. That's a mess. Waiting for someone with some sense to clean up, right? And then they find me and we start working together, start having some fun. So recap before I don't rant too much. I tell you, I've been a little rusty. I haven't been on a live stream in a while. So just to recap, let's know our numbers first. Whether we got to pray on it, whether we got to meditate, whether we got to talk to our spouses, let's really process. Am I ready for this opportunity to invest in real estate? Right? Am I actually prepared for that? Or are there some other moves that I need to do first? Okay? Then we establish your goals. What are your goals? For me, 10K or more, passive, replaces my fiance's income, make money with clients, document the process. Cool. Phase 1, education. I want to absorb as much education as I can in one direction. I can't be learning from Grant, Tony Robbins, Dean Graziosi, Dan Loke, Kwok, Chris Crone. I can't be learning from 50 other people. I got to pick one person that I'm going to go all in on and get all my information from that one person. I'm going to narrow it. So all my education is coming from the Kwok brothers. Okay? Not that I don't care what these other people are doing and those things may be interesting, but it has to come through this lens first. So if I learn something different from someone else, say Pace Morby, I'm then going to learn whatever video I just watched with Pace Morby, and I'm going to bring it up to Sam and Daniel Kwok. I'm going to mention to them, hey, I just heard about this thing. Are you guys doing this? Run it through their system, right? That's how my lens will work. So education, community, one location. That's Passive Income Mastery. I'm in that program now, right? So I'm investing time, money, and effort to be in this community. I'll attend in-person masterminds and fly and stay at a hotel and food and all that. Phase 2, this is what I'm building with my audience because I'm in a unique position. I've got an audience, I've got leads, I've got hundreds of clients, many of which want to do real estate. So I'm like, okay, I've got this war chest sitting. I'm sitting on a gold mine. How do I ethically use this so that it creates a win for all three parties? The client, the investor, myself. And it creates a streamlined process. So I got my investor partnerships brewing. These two right here, I'm going to focus. We're going to be looking at mostly seller financing or straight cash deals on cheaper properties that create cash flow gets the ball, get a couple wins. I get to shadow some of these deals potentially, right? And that'll lead to phase 3, actually doing deals with a client, documenting, creating content through a community-based system. So we'll have Zoom meetings. Only people in the room are going to be the investors, myself, my clients, and any audience member. Either they're a client or not a client, but they qualify, meaning they have a certain amount of capital, they know their numbers, they're not drowning in debt, they're not desperate for money, they're not chasing money. I'm going to evaluate your mindset, right? And say, okay, you come in this way. If something were to go wrong, that client's not going to run and hide under a rock and complain. They're going to say, okay, how do we make this a successful deal? They're going to think abundantly. Not, oh my God, that didn't work and now Denzel's a scammer. Because I invested my money in this thing with some dude that he, recommended and now I'm not making no money. That ain't going to happen. So I'm making sure I'm doing everything in my power to make sure that doesn't happen. Because I know that does happen in other people's communities, right? With different gurus. They make you buy the course, you get the coaching, they promise all this wealth and all this amount of income you can make. Then you're not making any income, you're not doing any deals 1 year into it, 2 years in, 3 years in. Then they upsell you on another course, another program, and a renewal fees. And then you're like, oh my God, I'm feeding someone else's real estate investing goals instead of mine, right? This is going to be a place where there's actually deals being presented. Here's an actual deal in an actual city and state in the United States, right? And it's like, we're raising capital for that specific deal. And we kind of go one by one. Then there's the opportunity where we can learn together, right? So let's say you're like, all right, I want to do the education thing first, right? Let's say you wanted to do that. I've got the partnership that I made with the Kwok brothers, and I'm just going to put that link in the chat so you have it there. Just throw that in there. Pop up. Yes. Okay. So let me bring this up on the screen. Boom. So if you click on that link, that's taking you to a collaboration I did with Sam Kwok that talks about the education part, the mentorship, the coaching, to kind of create a streamlined process to get into real estate investing through coaching, mentorship, courses, live mastermind, in person, multiple, okay? Costs money, costs a lot of money for most people, okay? It's a lot. And that is the process that I'm personally taking, but you don't have to take that process. So let me be the first to say, don't get sold by me. Most creators don't even, right? You don't really hear that too much. Don't get sold by me, right? Even though I make money by selling, I sell things. I don't want you buying something you're not ready for. I don't want you investing in something you're not ready for. If we're already on a path, eliminating debt, we're supposed to pay off that credit card, we're supposed to then pay off the car, then we're going to pay off that loan, then we're going to hit on the mortgage, right? Let's stay on our path and not deviate and go buy Bitcoin, let me go buy this course, let me go jump here, and go jump there. I really don't like when that happens. It happens sometimes with my clients, and it's like every single time, they don't win. And I'm like, it's frustrating, right? It really sucks because I've gone down that path myself in the past. So I try to warn people. I try not to be the person that's not optimistic. I let them know, hey, if you're going to make this decision, I just want to know that you ran the numbers. I just want to know that you spoke to spouse about it. I just want to know that you prayed about it. You spoke to God about it. You got some kind of sign, some kind of confirmation, right? So your emotions are settled. And then logically, we ran the numbers. We counted the costs. We know that if this doesn't work out, I'm not going to be like out of a job, right? Completely bankrupt, in debt, way more now. Okay? So don't want that happening for any one of my clients. Don't want that happening. I just need to stress on it. Okay? So that is pretty much everything. Right? Only about 45 minutes in. This is great. Usually I talk forever. Right? So let me look at some of your comments, thoughts. I want to see what you're thinking. So I'm starting from the top. Hello, Jose. Andrea, hello. New sub here was wondering, when would you recommend someone do a second lien instead of a first lien? Wouldn't a second lien almost always be better since you're only making one payment instead of two? So technically you're still making two payments, Andrea, with a second lien HELOC, right? Because you still have your first lien mortgage that you're making a payment, and then you have your second lien home equity line of credit that you're now making a payment on the moment you pull equity out of there to go make your chunk. So you still have technically two payments. With a first lien, it's one payment because we're removing the first lien mortgage for a first lien HELOC. So now it's just the first lien HELOC. All your income goes in there. Your payment is just the interest on the HELOC itself. Clear? Now, if I want to say most people that are making like under $5,000 a month net take home and your cash flow is $1,000 or less, most people, a first position HELOC, I have not seen it really make a whole lot of sense. This is just general, don't take it as gospel. But generally speaking, the first lien HELOC makes a lot of sense for my higher income earners and my income earners that are fluctuating. So you're high income, but it fluctuates. So maybe you work in a commissioned position or freelance position, and there's some months where you make $25,000 and other months where you're like $4,000. A first lien is great for that kind of person because not only are you like have the ability to rapidly pay down the debt really, really fast, but you can also live out of the HELOC and it not cost you a whole ton, and you can still operate efficiently. Okay, so first lien HELOC tends to favor those with higher incomes and higher cash flows. Having a conversation with a client recently where they were deciding between the first lien and the second lien, and they were struggling to understand how, if both interest rates are the same, a first lien HELOC and a second lien, they're like, well, wouldn't I just go with the first lien? Well, it's like, sure, you could do that. But on a first lien where you owe $300,000, let's say, at the same interest rate on a second lien HELOC that's at $40,000, which is easier to control on the interest cost? The $300K owed or the $30K and you owe chunks of 15 at any given time? Chunks of 15. So one option is you replace your full $300,000 mortgage with a $300,000 first lien HELOC, and maybe it's got a little more space in there. So now you still owe the $3. With a second lien HELOC, you still owe the $300,000 on your first lien mortgage, and now you have, say, a $30,000, $40,000 second lien home equity line of credit, and we're going to do chunks of 10K every few months, chunks of 15K every few months. You can control, especially with a lower income, you can control the interest rate much easier, where it doesn't like beat you up and eat all your cash flow internally, even though a first lien can be easier logistically. A second lien, for most people that I work with lower incomes, 3, 4, 5, 6K net a month take home, dual salary or one salary, let's stick with the second lien. Let's wipe out all this other debt first, and then eventually maybe graduate to the first lien. That's usually what I see a lot of people get good success with, versus those that just jump right into the first lien and kind of mess themselves up. The other factor we're not considering is, how disciplined are you, Andrea? How disciplined are you to manage a first lien HELOC? Let's say the value of your home is $500K. You get a $450,000 line of credit, of which you only owe $300,000 on. So you have $150,000 of space in there. How disciplined are you to not touch that $150,000? Most people are not disciplined enough to not touch that $150,000 and simply pay down the $300,000. Most will go, I have $150,000, let me go invest in real estate and make 20-30%. And not realize that your 20-30% is literally going to get eaten alive by the interest you pay on the HELOC and the taxes that you pay, the capital gains. Thinking you were cash flowing, making a higher ROI, and your HELOC's only at 6%, but you're earning 12-15%. You're doing bad math, promise you. Doing bad math. Considering there is some type of cash flow, of course, correct. Yeah. So I'm trying my hand at paying off $13K loan, have a $5K HELOC. I'll let you know. Ran into a wall, ran into a problem or something like that, Lawrence. Okay, cool. All right. So you got the 5K, so you have a very, very small debt tool, $1,300 loan. Let's make sure we're running the math on that loan versus the interest rate on the 5K HELOC. Okay, cool. So you're thinking of going with them. So want to understand if you had any specific experience, good or bad. Yep. So my experience with the Kwok brothers have been nothing but good. They've been super, a lot of hospitality with those guys. They're very just aware of who they're talking to, from what I've noticed. I went to 2 of their in-person masterminds so far. One was in Fort Lauderdale. The one recently was in Chicago. Had a wonderful time. The characteristic, the type of people they're attracting in that community are typically, I want to say, these are family folks. These are people that have similar missions. They're managing their money, they're managing their finances. They're looking to build not just an income with real estate, but they're trying to build a business with real estate. So that's the biggest unique factor with their specific real estate program, is they're showing people not just how to make money in real estate, but actually build a business in real estate, actually have a team. Because it's one thing to do your first deal in real estate and you make money, and then you do another deal, you make money, you do another deal, you make money. You're going to find yourself with a full-time job when you have 5, 10, 15 plus properties. And if we're trying to actually create passive income in real estate to replace other income, it's going to be really smart to build a team around you where you have a broker, a realtor, a lawyer, CPA, a VA, someone that helps you, like negotiate the deal or close the deal. Like you have to figure out what part of the process of real estate investing do you actually want to specialize in. For me, what I'm going to specialize in the world of real estate investing is raising capital. How do you raise capital in real estate? All right. Well, you can do that by going and getting debt from the banks, institutions, and being at their mercy. Or you can go off market, offline, or online, in my case, and bring people into a community where all these people have money, and you can essentially, I guess the term would be, syndicate all that capital into one location, use that capital to buy a property that we don't have to go through the banks with. And then the investor, there's got to be an investor that negotiates the deal with the seller right? And then the person that helped raise the capital can also be in the deal as well. And that's what I want to be able to specialize in. But I'm not someone that's going to be researching real estate deals and opportunities. I'm not the one that's going to be skip tracing and calling sellers, cold calling sellers. No, that is a waste of my time. I am way more productive serving you and creating content, because that's where God has called me, to serve you here on your personal and business finances. So it would be a distraction for me to try to do my own deal in real estate, right? Like, spiritually speaking, logistically speaking, waste of my time. But if I can help my clients by making the process easier for them, by connecting them to trustworthy people, by connecting them directly to the opportunity. Say, here, there's something going on in Georgia right here. There's something going on in Pennsylvania right here. There's something going on right here. There's something going on right here. And we run the numbers together and say, okay, yeah, mathematically, this all makes sense. Are we all in agreement? Yes, yes, yes. Boom, do the deal, right? So that's been my experience, my friend. Hello, Denzel. Any particular reasons you went with University Bank instead of First Savings? I am shopping for a first lien HELOC. Came across First Savings Bank with linked sweep accounts. Okay, let's dive into that. So I'm going to erase the board. Okay, we're going to dive into differences between that first lien, second lien. We'll spend some time. All right. Give you my reasons why I went with University over First Savings. All right. So, as it relates to a first lien HELOC, there are three major competitors. Three popular resources. You've got FSB, First Savings Bank. You've got University Bank. And you've got CMG Financial. Okay? Out of the three, and I believe this is still the case, could be wrong, out of the three, University Bank, lowest fees compared to just these three banks. Now, what you guys need to understand, these three banks are doing the most amount of marketing, right? There are other banks that do first lien HELOC. You guys are too lazy. You're just trusting what Denzel says. First Savings, University, CMG Financial. There are plenty of other banks out there in the market that do first lien position home equity line of credit. But too often, we're being too lazy. We're not watching Denzel's videos on how we qualify banks and how we research banks in our area. It does not take a lot of time. Many of you are being lazy. It does not take a lot of time. It takes you 30 to 45 minutes at least to research 5 to 7, maybe 10 banks in your local area alone before you even go nationwide. And talk to those lenders and get the facts. Don't just rely on some kid like me or others. Please, let me be a guide. Let me be a helpful resource. Jump on a call together and we do it together. Happy to do that. But don't just stop at, oh, Denzel went with University Bank, so boom, that's what I'm going to do. Why would you do that? Let's think that through, okay? There's another bank called PNC Bank. Most people are familiar with. They do first lien HELOC. Look at their costs. Look at their fees. So again, just know that there's other banks, but these are the three most popular banks right now on the internet. Do you want to know why? Because these banks, they pay the creator, aka me. So First Savings Bank pays me to promote them. Okay. University Bank, I'm in the process of setting up a relationship with them where every time I send them a lead, they're going to pay me as well. CMG Financial doesn't pay, but the way I make money long term is by putting out valuable content about each of these different banks, how they work, right? And then because my YouTube channel is monetized, I'll make money long term with that, or I may even pick up a client. My long-term play with these banks is because no matter what, because of their marketing and they're paying the creator, me and other creators, to promote them, there's going to be a lot of people that get these things that were sold into it, but they weren't ready for it. And then they're going to be looking for some coaching. Well, I can tell you for sure, these banks do not do coaching. So then you're going to find me, then you hire me. And now I'm helping you with those tools, which is why I familiarize myself very much with these. Simply because of the nature of marketing. These banks just have done a better job marketing their products to you. So it's like a good end and can sometimes come with a negative, like all things with marketing, right? So I want to make that very, very clear so you understand the dynamic, what's happening. First Savings Bank, University Bank, CMG Financial do the most amount of marketing and collaboration with content creators. And they pay those content creators by form of leads. Give them a qualified lead, they pay a fee back to the creator. The creator wins, they got paid. First Savings Bank wins, they get a client, right? There are other banks in the United States that don't pay the creator, have lesser fees. I'm not saying PNC Bank, but some banks around here in the other category have potentially lesser fees. They don't pay the creator. You just won't know about them. You just won't find them because you didn't do the research. But those of you that are clients of mine and you jump on a call with me and we research together and we find the bank, yay! And we're like, awesome. Low fee, intro rate, cool, boom, boom, wonderful. Now, one of the things that these three banks have as leverage over these other banks is something called the sweep function or sweep feature, which simply means that if you go with any of these three banks, you're going to have a checking account with literally like a routing number, account number. You're going to have the HELOC, the revolving feature, and it's going to look like two separate accounts when you log into the portal on your phone. When you get income, it's going to land in that checking account, right? Then when the clock strikes 12 a.m., midnight, they will automatically sweep whatever balance you have in your checking account. Automatically is going to go into paying down your HELOC balance, automatically. So it creates some automation as it relates to the velocity banking concept. They help you fully minimize the interest that you pay on your HELOC. Okay, so that's the attraction. Now, that comes at a cost. These three banks, what I've seen, tend to have the highest fees compared to some of these other banks. They tend to. Sometimes not, sometimes I don't know, right? It depends on the state, right? Also, some of these other banks don't do business in all the states, whereas these banks do business in most of the states. So that's another benefit there, right? So the reason why I went with University Bank specifically was lowest fees, good service overall. I liked that they had this intro rate of they had a 4.99 intro rate for 6 months. And the way they calculate their interest rate is based off of the 6-month treasury bill, right? Which means that when this rate jumps to say 9%, let's just say, that rate will stay at 9% for 6 months. Then it'll change again. Then it'll change again. Every 6 months, the rate changes. So it's kind of like a fixed variable rate every 6 months. A fixed variable rate every 6 months. I like that because of the stability, where we've seen that in 2023 and 22, we saw interest rates really jump. I had clients that had HELOCs at 3%, now they're at like 9.5%. Jumped really fast, really quickly, and that really hurt a lot of people. We just wasn't expecting that. That was a big, just unexpected event that occurred. And now we're, managing that. So for those reasons is why I went with University Bank. I did my research. First Savings was more in cost. CMG was more, and that was it. It was a pure math thing. Right? The closing costs, it was just around 1,000, right? Whereas First Savings, they're just to underwrite the product with them is $14.95. I think CMG might be a little more, right? And then if you go with their fixed rate option, there's like another fee on top of that. So you really just have to go through the whole process with all of them. See which one makes the most sense for you and it's most practical. But just know that functional wise, like they're all going to function pretty much the same, right? These other banks where you might have an advantage is zero closing costs. You may find that. I'm not saying with PNC Bank. I'm just saying that's a bank I just know off the top of my head right now that I've had some clients use for a first lien HELOC. So I know PNC offers it. But in the other bank category down below here, you can potentially find zero closing costs and also potentially lower interest rate than what these guys are dishing out. Okay? Was that helpful, my friend? Is that very helpful? Let me know. Cool. Hey, Chris. Yes. So earlier, yeah. So not exactly a syndication. I think in order for something, I guess, to be qualified as a syndication, I think there has to be like a fund attached to it, right? So we're not investing in a real estate investment trust fund. I think that's when the term syndication is actually the case. Whereas what I'm going to be engaging in is, let's say, for example, there is a property in Pennsylvania and there's a seller and they're selling their home for 30 grand, right? The investor negotiates a creative finance deal or seller finance deal. The investor goes and raises the capital for the 30 grand because maybe the investor doesn't have the money. So they're not using their own money. They're raising the capital from you, me, someone else. They now get that 30 grand, right? Or a down payment, let's just say. And they give that seller what they negotiated. Now the investor is managing the property, putting a tenant in to create cash flow. You get in a LP with that investor on one property, one LLC, one partnership on that one property or two properties or whatever it is. And that's going to pay a stream of income to the client, you, me, person that put the capital up, and the investor, they get a cash flow for managing the property, right? The investor and you get to either sell that property at a later point in time, flip it, or continue to hold on to it. And it creates more long-term income. That's more like direct to invest, versus a syndication is like working with a Grant Cardone, a Chris Crone, a Tony Robbins, where they have this real estate fund and they're going to give you 10, 12% of the portfolio that they're investing in. So that's different. This has more opportunity for a higher return on investment because we're only talking like one investor, two investors or so, like per deal, right? And then it's like multiple deals. Maybe I'm wrong. Like, I'm not going to sit here and claim I know a thing about real estate because I don't, right? So I could be totally wrong what I'm saying. I think what I'm saying is right. I see people buy the program all the time and come to us to fix things. It is super frustrating. Wealth, wisdom, financial. Okay, you're referring to like when people buy courses and stuff and, oh my God, it didn't work out. Then they get some real coaching and we deal with the real problem. I don't really think, for the most part, that there's this whole world of content creators selling their value, their time, effort, energy they put into these courses and programs to help people make money, and they're out here scamming people. I don't think there's a majority of people doing that. Is there people doing that? For sure. I don't think the majority is. So I don't necessarily think it's the program. Oftentimes, it's not necessarily the program. I think it's you. I think it's us. I honestly think that most of the time it's us. We didn't qualify ourselves for that program, and honestly, we got sold into the program. Rather than being educated and knowing, praying, manifesting, prayer, whatever it is, to really say, yeah, this is for me, and I'm going to take the next few, however many years, right? There's a quote that I first heard it from Daniel Kwok or Sam Kwok, one of them. And it was, most of us overestimate what we can do in 1 year, and we grossly underestimate what we can do in 10 years. Does that make sense? So again, whether you like to admit it or not, many of you in this room watching, even catching the recording, are chasing money. I promise you, you would have not failed that program, that high ticket course program. You would have not failed so fast if you were chasing money. If you were actually chasing value and purpose, even in the period of not making money, you wouldn't quit because you're chasing something different. Money is going to be a result of the purpose, the passion, the effort that you put into it. It's just a measurement of your productivity. All right? That's a hard one to swallow. But the truth is that many of us are overestimating our production of what we can do in 1 year. I'm going to buy this Amazon store. I'm going to make $5,000 a month. I'm sure you can. I'm sure someone else has done it online. I'm sure they're out there. $5,000 a month in 1 year, and then you don't do it in a year, set that massive goal, and you failed miserably, right? But what if you would have reversed it? What would it look like over a 10-year period if I kept this store, Amazon store, if I kept doing real estate investing for 10 years straight? If I just started the dang YouTube channel? Some of you know who I'm talking to. if I would just start the YouTube channel and just start creating content and just do the one thing and put a 10-year timeline on it, I don't care if you're even 70 years old, 75, you put a 10-year timeline on it, even if you pass away in the process, I promise you'll be fulfilled in your life because you didn't quit, right? You saw it through. You put all of it into it. Only way to make money is to sell. Yeah, okay, that was from something else I said. Denzel, when you get an opportunity, could you give me a call regarding insurance? Hassan. Okay, email me, please. You jump on that. Then you're not buying low enough. I haven't sold anything. Just gone after cash flow. Eddie's talking to someone else. Don't take this guy. Moving paper from one place to another while still being able to hold is a challenge for most investors. I raise capital through loans and through private loans and loans from 401ks. Cool. That was something I said earlier. Yeah. I know where you stand. Make the calls, ask questions, do due diligence. Awesome. Denzel, used to promote Money Max account in your older posts. Are you not recommending them anymore? Any bad experiences with them? So yes and no. Yes and no. We'll go into that real quick. Because I've actually had, I think I've had that video like really getting a lot of views, and I did it so many years ago, like 3-4 years ago. And now it seems to be picking up a lot of steam. So let's find out why. All right. So Money Max account, what is it? It is a software, right? So product, financial software, helps you pay off debt. Primarily, that's what it's for. Helps you pay off debt. Plug in all your numbers into this system, then it tells you what debts to pay off in the mathematical fastest way possible. That's what they promote. So that's the product. Company. UFF or United Financial Freedom. Okay? So, company name, United Financial Freedom. Product, Money Max account, financial software helps you pay off debt. Okay. I don't know what their prices are right now. I have to look. I'm willing to bet it's still high ticket. So it's a high ticket offer. High ticket. It can vary in price according to how many mortgages you have. All right, so depending on how much debt, how much mortgages you have, your price will be higher. Right? If I'm not mistaken, I think I paid about $1,500 with no mortgage. It's $1,500 or less. No mortgage. So I have the product. It's a lifetime product, so I have it. I know how it works. I think the range is more so around here and maybe could be as high as here. 6,000 or more, something like that. Correct me if I'm wrong. If anyone in here has been actually quoted a price, throw it in the chat. Let me know. So it's relatively expensive, right? Shows you how to pay off debt. For the most part, it is a pretty efficient debt snowball strategy. So It's not, there's no magic occurring here. It's simply a software that helps you stay accountable. You log in, tells you what debts to pay off, tells you when to make the payment. As long as you put your numbers in accurately, it'll tell you what to do. You can connect your bank accounts to that software for an extra cost, right? And that is another level of accountability that it'll keep you on track. Another cool part is it tells you exactly when you'll be debt-free. Once you put all the numbers in, your cash flow, all your debts, interest rates, everything, all that stuff, it'll tell you exactly when you'll be debt-free. Okay? Now, those are the pros. It works. As long as you put your numbers in correctly and accurately, connect your bank accounts, and you have to consistently log into this thing, look at it to stay up to date. There's some other cool features in there, like it has like an opportunity cost calculator. If you put yourself into more debt, how much more time does this add to your debt-free timeline? It's got some pretty cool stuff in there, no doubt, no doubt. But here are some things you want to really be aware of, right? For the person that commented, I don't know your name. Are you tech savvy? Okay. Ask yourself, am I willing to log in consistently to the platform and be accountable? Right? Many of my baby boomer generation, those that are 45, 50 and up, I can't even get you guys to fill out a financial spreadsheet. When I send it through Google, you guys have a really hard time just putting a financial spreadsheet together, right? Let's be honest. It's a little tough. I'm not knocking you for it. You didn't grow up with a tablet in your hand or a laptop and phones. You're just from a different generation. You did not grow up with computers, phones, and all this stuff. I did. So it's super easy for me. Easy. That's why when I get on a phone call with my 65-year-old client or my 55-year-old, and they're like, Denzel, I don't know where the link is. I had trouble filling out your spreadsheet. I said, let's jump on a call. Let's hop on a Zoom. Oh, Denzel, I've never done Zoom before. That's all right. It's the first time for everything. We get on Zoom. I help you share your screen. I help you navigate to your Gmail account. I show you how to download the spreadsheet. I show you how to add it to Google Sheets. Send me the link. And we start doing it together. Right? And then over time, you've got yourself a digital financial spreadsheet that shows your numbers visually. We see what's going on. Right? Many of you, that is a process. Can you imagine doing that by yourself with a software that costs you a couple grand? And even with the support of whomever signs you up, you only get a limited time with them, say 6 months. Quite often, from my experience, a lot of these guys that sell the financial software, not everyone, okay? I'm not knocking those that actually do a good service, right? But they know that there's people in the company that are only focused on selling the product and not actually servicing the clients, because it's not really your job, okay? And you're not really being held accountable to do that job. So that's one of the downsides with the United Financial Freedom is it's not like you're hiring someone to actually help you. You're buying a software, buying a product. That's very different than hiring a coach. Now, some of the UFF people present themselves as coaches, which is great. So they're saying, hey, on top of you buying this software, I'm going to help you every step of the way. until you're fully self-sufficient. I know some people do that, right? Which is great. Many don't, because they're only focused on making money and getting the next lead, getting the next sale. Because they're commission focused, they're commission driven. And why wouldn't they? That's how they make money. So the company has a bunch of distributors, a bunch of independent contractors basically selling this software. But they're not actually being trained to be a coach, to be an accountability partner, to actually help that person. Because if it was this easy for you to just buy an app, buy a software, and get out of debt, I promise you so many people would be out of debt right now. But that's not the case, right? Let me throw in Dave Ramsey for a second. This is why Dave Ramsey built a whole empire, essentially training a bunch of coaches. And I know that actually does work, whether people like him or not. Having a coach and accountability partner with some tech, great. With some software, some technology, wonderful. But there's nothing that like accountability. You can't talk to AI yet, really. Like, can't really talk and have a genuine connection with your software on how to process these financial decisions that you have to make on top of trying to get out of debt. So where I think UFF drops the ball is on the coaching part, because they only talk about 6 months of coaching and then some kind of customer service, and there's no real connection. That's the problem. It's not a real connection. I haven't witnessed that. So that's one thing. The second is, I do think there's a lot of people that you're just not willing to log into the platform every single day and stay consistent and kind of hold yourself accountable and actually learn how to use the system. It's going to take you some time to actually learn how to use the software. Okay? For me personally, I own the software. I never use it because I still literally, I make multiple six figures a year and I manage all my finances on notes. I don't know if you can see it. No, it's too white. So I have all my finances literally on my phone, on an app, and I document all my living expenses, all my operation costs, and I do case studies on myself, which you've seen in the videos. That's how I manage my money. It works for me now. Now, when I get to like maybe 7 figures or so, I might have to include some tech, but in the meantime, I'm getting results. This is what works for me, right? So you need to know whether you will work for the software, not if the software will work for you. Because I'll tell you for sure, the software will work. Put the numbers in correctly, right? Everything is logged and you're staying on top of it. You'll get results. It'll work. So am I willing to log into this consistently? Also know that a downside, limited coaching, if any, right? And there's another thing that I don't like. They took a turn, I think this was 2021 or 2022, is they started promoting almost like keeping you in debt longer for the sake of acquiring another product, right? So the mission of UFF was to see America be debt-free or something like that, right? Debt-free Americans, right? It was all about paying off debt the fastest. Well, then they started at one of their conferences that I went to a couple years back, they introduced purchasing an IUL, so a life insurance policy, and funding that to then borrow from that to then pay off your debt. And it would increase the average timeline of someone getting out of debt, like 1.5 years or 2 years or something like that. And based on their original mission, I'm sitting there, I'm like, dude, I'm not really against unique creative strategies, but when you completely do a 180 on your goal to help people get out of debt, and you're going to show them this new product that they can buy on top of the software that they don't know how to use, that they just bought, on top of having these independent contractors that aren't financial coaches, that aren't on a salary, they're all commission based. And you're going to go tell them to go get their life insurance license and learn about IUL, and you really think they're going to be able to design a proper IUL on top of a software that they themselves haven't even spent enough time on? The average person that's joining the company to sell UFF, that's a problem. Giving too much on that person that's joining it, because the person that joins the UFF company is looking for a financial freedom solution. They want to make more money, right? And so the marketing tactics that they have, I also don't agree with. It's like, dude, the person joining in is not a financial expert. What do they know about personal finance and stewardship and all this stuff? They've taken no training on it. They're only being trained on how to sell the software and how to communicate that to the client, the value. But I think if you guys took a little extra steps and said, no, like, let's actually get our people trained on personal finance, on coaching methods and conversations and mindset training and understanding how money really works. And then if they buy the software, let's also encourage those people to spend extra time with those people until they become fully self-sufficient on how to use all the different buttons on the software. So with that, I've never actually sold the Money Max account. I had a business partner that was going through an extensive process to service people, and I was, leveraging this person. His name's Sebastian Boyer, and he was my main point of contact whenever someone wants to buy the UFF. I send them their way, and I say, if you buy the product, right, and you work with me, I'm going to get a commission, he's going to get a commission, and I'm happy to jump on a call to kind of help you navigate that, right? Over time, we can work together. But the problem was the value shifting with, like, internally in the company, where it's like, okay, now I'm gonna have a client that goes through UFF, and then they're gonna get sold again into some other product, an IUL, that they barely even understand that before they understood their software. And that's going to be too much work for me to kind of keep an eye on. So I kind of pulled back and said, look, if you buy the product, great. If you buy the product and then you want coaching from me, right, then I'm willing to work with you on that. But I kind of distanced myself from it. So I really haven't made money from it much anymore. I've had a couple people definitely go through it. But again, if you're someone that becomes a client with me and you already have the UFF product, I know how it works. I understand it. So we jump on a Zoom and you kind of pull it up. I'm going to know what's going on. I'm going to be able to follow you and then kind of help you navigate that, right? Now, another thing here that I don't know if they fixed it yet, but this was another block for me, was their credit card with the cashback rewards and the 0% offers. I don't know if they fixed this yet, but when you log in and you put your credit card information in and you want to tell it that it's on a 0% till May or June 2025, right? And you're getting cashback rewards of 2.5% or 2% or whatever it is, you're not able to put that in. So then it kind of messes up the numbers when it tells you, oh, pay this off, but it's at 0%. So you kind of have to manually do it, and that creates additional work that I don't really love or care for. I don't really like that. And it grossly underestimates the velocity banking performance with the software itself. The way it tells you to make chunks. Like, I remember running a couple of case studies. I'm like, why is it telling me to chunk this much? Right? Like, I didn't really like that. So that was another thing. I don't know if they fixed it by now, but when it comes to chunking, there should be some better planning on how you encourage people to chunk. And it's hard to train a software to know how much this individual should chunk from their debt tool, how much that first chunk should be. Very hard for a software to like know that, hey, you, Tom, you've never done velocity banking before. You've got this high-end software and you got a first lien HELOC and it's telling you to do a $50,000 chunk on your car and these 3 credit cards here. And now you got all this debt on this HELOC and it's telling you to do velocity banking this way. And like life happens, okay? And now you got this big old debt here, okay? So sometimes it's a little, just a little awkward. Like you really got to manually monitor your software in order to get the full benefit. It's not a set and forget. It's not something I just log into and say, oh, okay, cool. You definitely want to be hands-on, get really familiar with the product, because it's just going to be you after 6 months or so. Person that sold you the product is off selling a bunch of other people the product for the most part, and you don't really get that one-to-one coaching type of a service, right? So good experiences, sure, some bad, and I'm at the point where I'm like, all right, I'm gonna wait. I'm gonna see how they improve over time. So, okay, please say thanks for your input. Cool. Bank of America has no closing costs. So here's another thing, Ushani. Sure, Bank of America has no closing costs. It is a major bank, and sometimes the use of their HELOCs can be a little bit limiting. I could be wrong. But if Bank of America offers a first lien HELOC, we want to make sure that I'm able to access my equity without having to do checks only. I want to make sure I can actually withdraw the funds immediately, same day, and move money in and out, right? The other thing is with Bank of America, with a personal checking account, I think you have to keep a certain daily balance to avoid any monthly fees. Could be wrong. So we also want to check on that. Like, oh, do I have to keep some money out of the HELOC to avoid the monthly fee for having a certain daily balance? So if we're always going to be rocking at 0 on our checking account for the most part, because all of our money is sitting in the HELOC, well, now I'm paying, like a monthly fee or whatever with Bank of America. So check that out. Be sure. So let's see. Most something. What is HML? Make their money on doc fees and points due to investors paying off debt in a very short period of time. I've never seen that abbreviation before. Please educate us or me. Very helpful, cool, first live, awesome. I was quoted $5,000 due to 6 mortgages. Okay. Yeah, speak my language here. Teach people to think. Yes. What is HML? Eddie, help me out there. What is that? I don't know what that is. Help me out here. All right. I'll wait for Eddie to respond if he's still with us. If not, pretty much all done here. Covered a lot. So to stay up to date, you're going to want to join my email list, right? Or join Finance Geek Ministry, because that's where I'm going to be doing my Zoom meetings regarding the real estate stuff. Again, it's going to be a slower process. I want to make sure I do the right thing for everyone. I don't want people getting ripped off. I need to have qualified investors, qualified clients, match you up together, that even if the deal doesn't work out, it doesn't put you in a terrible financial position. That's very, very important, right? If you're looking for one-to-one coaching with me, take a look at my website. We can work together, jump on a call. Most people start off with an initial consultation to get started. That's usually, makes the most sense. You want to build that trust first, right? So I will drop that link in the chat as well, right here. So if you want to jump on a call with me, right? Again, you go right to my website, boom, right there. And then to join my email list, either just fill out my contact form, join Finance Geek Ministry, jump right in, spend some time with me. It's on the same website, denzelrodriguez.com, but I'm going to put both links in there so you have it. All right. That's ministry right there. See all different tabs. So we can work together. Let me meet you where you're at first. Let's build you up. And then we start expanding. Let's pick one thing that we're going to specialize in, get really, really good at, so we can have a lot of success. And then we can start spreading that money around once it makes sense. Okay? Okay, so I'm not seeing that comment from Eddie. I tried to buy some time, but we are going to go ahead and close it out here. Thank you so much. This was a great live stream. Thanks for giving me some grace. A little rusty. It's been like 3 months. I'm going to try and get back and be more consistent. I love what my good fellow content creator Christy Van is doing, pumping the content out. I want to say every day still. And she's been at it, I want to say, for about 1.5 years. It is really cool to see that level of consistency. I hope she can keep it up or figure out a good, sustainable schedule for posting content. But right now, on a roll. Absolutely love it. So that's another content creator, if you don't know, talks about velocity banking primarily, right? I do all three. I do velocity, infinite banking, and kingdom authority. And I'm a financial coach and consultant, kind of helping you strategize on your numbers and finances. But just know that Christy Van's another option. If you really resonate with her, have a conversation. I know she promotes UFF as well. Maybe find out for me who she's working with. I was trying to find out. I don't know if she is directly promoting it or someone on her channel. But I know I've seen some stuff where she was promoting the UFF at one point, or had a couple clients talking to me that she had recommended it. So it'd be cool to know who exactly in UFF company, because I'm telling you, you could have a vastly different experience with someone who is qualified in the UFF company as an independent, distributor, agent. I forget what they call them. Someone that actually cares, it's actually going to work with you, it's actually going to show you the product, and not just, let you figure it out on your own after a couple months of limited coaching, if any, right? So yeah, we're going to close it out here. Thank you so much. God bless. And we'll be talking soon. All right. Bye now.